day, grade 12 learners. Welcome to our accounting lesson. We're going to look at paper 2. My name is Beauty Mpanza. This lesson is brought to you by Gauteng Department of Education in collaboration with Saibono Discovery Center. I've already indicated that we're going to look at the paper 2 topics today. And this is the breakdown of our paper 2 topics. We have budgeting, we have stock valuation, we have cost accounting, value-added tax, tangible assets, bank reconciliation, creditors records, debtors reconciliation, and please don't forget that you also need to look at the debtors age analysis. And this is one topic that is normally not prepared for, for exams. And just to remind you, the debtors reconciliation was a section that was done in grade 10. Therefore, it might happen that in an exam, when you're sitting for your grade 12 final exam or even trial exam, you may be tested also on that section that was done in grade 10. And I'm going to unpack to you also the topics that are examined in all the papers at the end of the year. If you can open all the past papers, whether national papers or even the trial exam papers from different provinces, you will see that there are common topics, that appear in every examination. Budgeting is one of the topics, manufacturing, as well as stock valuation. So our lesson for today is going to look at those 3 major topics for paper 2. And you can see the list of topics is very long, for your paper 2 topics. It's a very long list. And normally, what examiners would not examine all the topics that are provided in this list. But I want to assure you that your budgeting, manufacturing, and stock valuation, you need to prepare for those topics thoroughly because they will appear in your exams. And remember also, there are paper 2 indicators. And if you go to your examination guidelines for 2021, there is a breakdown of the paper 2 topics. And these are the examples of the paper 2 indicators. I'm sorry. These are the examples, the break-even point, stock turnover rate, stock holding period, markup, etc. Just go to that list. You will see all the all the indicators for paper 2 topics. And please refer to page 10 of your 2021 examination guidelines. That is where you're going to find the breakdown. And some of the material that you are distributing out to schools, we also give you the list of topics that are examinable in paper 1 as well as paper 2. The internal control and ethics also, they form part of your paper 2. And they are tested with the topics that are included in our previous slide. They are never a stand-alone topic for assessment. They will be embedded in other questions, in other topics. The tangible assets also, I'm going to explain to you about the tangible assets because you find them also in 2 papers, paper 1 and paper 2. But in this paper for your tangible assets, we are going to look at the calculations as well as the internal control processes. Depreciation may still be calculated in this paper, in paper 2. Accumulated depreciation, carrying value, disposal of assets can be done also in this paper. But this paper major looks at the internal controls. You will not find the internal controls in paper 1 because paper 1 is dealing with the financial reporting, not the management of resources. it deals with financial reporting by companies. And to mention again, stock valuation and tangible assets are tested in both papers. And you will see that when you prepare for your paper 1, the examiner can ask you to calculate the value of the closing stock or calculate the stock deficit or even the stock surplus. And that is limited to that information. And then when you go to paper 2 that we are going to unpack today, you will see that now you calculate, you do a lot of calculations that will include the units that have been stolen, the closing value of the stock. You know, we calculate quite a lot of calculations that I'm going to give you a breakdown of. So the objective, as I have already mentioned, we are going to look at the cost accounting, budgeting, as well as stock valuation for today's lesson. I want us to start with the format of the production cost statement, because that is going to be our first topic for today. And it's very important to know your formats when you enter the exam room so that you can be able to place, the figures in the correct places so that you don't also lose marks or you are not also penalized by the examiners, for misplacing the figures. Let's look again at the production cost statement. You will see the structure is as follows. You will have your direct material cost, have your direct labor cost, and when you combine those two, they will give you the prime cost. And then as you go down, you will see your factory overheads. And that is where we record a number of expenses. They include your insurance, they include your water and electricity, they include the rates, they include depreciation, but only the expenses that are specific to the factory that we include under factory overhead cost. And then from there, you'll go down and add your prime cost as well as your factory overheads, and that is going to give you the total manufacturing cost that has been incurred by the business. And then again, you will have to place the work in process at the beginning of the year. It must be added. Remember, this was the stock that was in process. It was not completely produced or transformed into goods that are ready for consumption. And as you go down, you will see in this structure, all the amounts are added. All the amounts are added except for the work in process at the end of the year. This is the only amount that you're going to deduct from your production cost statement. The rest of the amounts are added. I want us to look at the first activity. This activity is extracted from 2018 NSC paper for November. And we are going to look at question 1 of that paper. I hope you have your pen, your calculator, and your paper where you are going to write down. Okay, we are required here to refer to information C. Remember that our business is manufacturing the shirts, and the financial year end is 31 July 2018. So it's very important to note the financial year when we preparing the financial statements or preparing any financial records. We are expected to calculate the direct labor cost, and that is going to be recorded in our production cost statement for the year ending 31 July 2018. The information is provided as follows to us. We've got number of factory workers, and that is 4. Number of factory workers is 4, and the normal time expected per year is 1960 hours, 1,960 hours. The normal time rate is 90 rands per hour, and the bonuses to workers are 12% of their normal wages. You need to note that one worker worked only 1,680 hours and received a reduced bonus of 12,146, which clearly means that now when we do our calculations, we are going to separate them. We've got 3 workers who have the common number of hours, and then only 1 worker, who has worked only for fewer hours. Therefore, we need to divide our calculations. We're going to start with the 3 employees. The normal time, we have indicated that it's 90 rands. They are paid at the rate of 90 rands, and they have worked for 1960. And when you do your calculations, you will get 529,200. So that's their basic wage, that's their normal time also that they have worked for, or normal wage, let me say that. Okay, they are paid the bonuses, 12%. We're going to take the 529,200, multiply it by 12% in order for us to get 6,304. So this is an additional payment that is going to be given to our employees. Let's look at one employee. He's working for only 1,680 hours, and he is only going to get 151,200 for the whole year. And he's only receiving a bonus of 12,146. Now we need to combine this in order to get our direct labor cost, which is going to be your 529, this amount, plus 63,504, plus this 151,002, and this amount, and your total direct labor cost is going to be 756 and 50 rands. That is our direct labor cost. I hope you are taking down, the calculations. If you check the information that is given to us now in this slide, the raw material that was issued to the factory amounted to 528,300. That is the raw material that was issued. Let's see how do we record this in our production cost statement. Already we have 528,300 that has been worked out in the previous page. I'm sorry, we have 756 and 50. I beg your pardon. Okay, our raw material is 528,300. This is where we're going to record. And then when you refer to your previous page, we calculated our direct labor cost as 756 and 50 rands. And then that is going to bring us to the total of 1,284,350. And that is going to be our prime cost. Let's look at the next slide, the next information. Factory overheads were calculated at 360,880 for the year. However, this excludes insurance of 48,750 that was paid for the period 1 August 2017 to 31 August 2018. I'm going to repeat this information. This insurance was paid for the period 1st August 2017 up to 31st August 2018. And it's very important to note that our year ends on the last day of July. not on the last day of August. So that means that now we have paid the insurance in advance. So there is an amount that we need to eliminate in order to get figures that will be recorded for the current year. Let's look at the insurance and how it is allocated. It must be allocated to the factory, to the admin, as well as to the sales department. And this is the ratio that is given to you. It is the ratio 4:3:2. So this is how we need to allocate. But remember, this for the 8,750 includes an amount for August that we need to take out from our records. We cannot report on the expenses for August. Okay, let us look at the correct calculation. Remember that we are given the amount for 13 months, and what we are looking for, it is the amount for 12 months. We are going to say now for the 8,750 multiplied by 12 divided by 13. If you still remember the UK method, if you use it, you will never go wrong with these calculations. Then our answer is going to be 45,000. I hope you are also calculating there. You are getting the same answer that I have. We now need to look at the factory overhead. How much are we going to allocate in terms of the insurance? If you look at your factory overhead, remember we've already calculated our 45,000. We are now going to say times 4 divided by 9. We got this 9 by saying 4. 4 plus 3 plus 2, it gives you 9. Therefore, for our calculations, we'll say 45,000 times 4 divided by 9. Because your 45,000 is equivalent to 9. And then for factory, our expense for factory will be 20,000. Okay, this is how we are going to record this in our production cost statement. Remember, we've already done this part. Now, this is how we're going to record this. This amount is a given figure from if you can go back to the question paper that is given to you, as well as the answer book, you will see that amount. Okay, we're going to add this 20,000, meaning that now our total factory overhead cost will be 880. And that is going to give us our total production. I hope we are all clear, you are following. Okay. Remember, we still need to display other calculations. We are still going to display other calculations. You will pardon me, my slide. Okay, the insurance, remember that we said it must be allocated to. Okay, I'm going to take a minute, just a break for a minute, and I'll be coming back. In the meantime, just look at the question. Just try to work out other calculations for your admin as well as your sales department.
Excellent. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
You have been given power to decide whether you want good results in your life, in your schoolwork, or you want bad results. As Tony Robbins said, it is in the moment of your decision that your destiny is shaped. And your destiny is shaped right now with the decisions that you are currently making in your schoolwork. So decide whether you want to be an A student and start working on it, because there is power inside of you. The infinite power is inside of you, and the time you decide to tap in that power, you will become who you want to become in your schoolwork.
12 letters. I want us to look again at the insurance. Remember that we have just done the calculation for our factory, and that was 20,000. I want us to look at these other departments. That is your administration as well as your sales department. If we calculate the insurance for our admin, it is going to be 45,000 times 3. Remember, according to the ratio, they are allocated 3. So it's going to be 3 over 9 times 45,000, and that will give you 15,000. Let's look at the sales department. The sales department is going to take 2, and we divide that by 9, and that will give us 10,000. And if you add this, it will give you 45,000. So this is how we have apportioned the 45,000 between the 3 departments. And this information, your admin cost, your sales and distribution costs are not recorded in your production cost statement, but they will be recorded in the abridged income statement. And this is the example of your abridged income statement. Unfortunately, we haven't got figures for sales, the cost of sales. We don't have these figures, but this is where they are recorded. So in an exam, if you're expected to prepare the abridged income statement, this is how it is structured. And then you will see that with the selling and distribution cost, we have recorded our 15 here, and the admin, we have recorded our 10,000 rands. I hope this is clearly understood. And this is one of the questions that you need to expect in any examination, because examiners like now to test you on these questions. And I want you to go to your 2020 paper, November NSC. You will see that they are testing you also. I think it's 2017, yeah, where they are testing you on the abridged income statement. But we've got the material that was developed in 2021 that is broken down, that has been worked out, and it also worked out the abridged income statement. So a solution for this was also worked out. We went beyond the exercise itself. So please talk to your educators. That information is available. It shows you a very, very clear breakdown of your abridged income statement. And if you go to your 2021 paper also, you were tested, learners who wrote last year were tested on the abridged income statement. So this is a very important section for one to know. All right, let's look at other calculations and other information. You will see that we are given the work in progress at the beginning of the year, but we are not given the work in progress at the end of the year. Okay, this is how we record our work in progress. Remember that we have already calculated our total production cost by taking our primary cost plus factory overheads, and then we got our total production cost. We are now going to add our work in process at the beginning of the year, and that's your 35,570. And these are just your easy marks. Okay, let's look at information number E. Production for the year is 17,005 shirts, and they are at a cost of, or they are produced at a cost of 95 rands per shirt. The calculation here will be 17,500 rands multiplied by 95, and that will give us 1,662,500 rands. And these are some of your easy marks. And we are going to record that information right here in our production cost statement. This is where we are going to record it as our cost of production of finished goods. Let's check how the complete production cost statement looks like. This is how it looks. This is a complete production cost statement. We've combined all the calculations that we have done into this statement. I hope you'll be able to respond to this question in an exam room. I want us now to look at the break-even analysis. We'll start by calculating the break-even point. And each and every exam paper does assess you on the break-even point and the break-even analysis. This business manufactures the security gates. The financial year end is 31 August 2018. You are requested here to calculate the break-even point for the year end for 5 marks. And you need to compare and comment on the break-even point and the production level achieved over the last 2 years. And you need to quote figures as well for you to earn marks. Give 2 reasons for the increase in direct material cost. Suggest one way to control this cost. Okay, let us look at the information that is given to us. We are given the breakdown of the figures. That is your variable cost, your fixed cost. And these are the figures that you are going to need to calculate our break-even point. We will need this information. Remember that we need the variable cost also to calculate our break-even. And we need to check the information that is given to us by examiners. It's very important that we inspect it. Because as you look into this information, you will see that 577 is given to us as a as a variable cost. 577 is our variable cost per unit. We need it per unit. And adjacent to these calculations, you will see we've got total amounts. We don't need these total amounts. You can only use this information given here. If this information is not provided to you, then you will take the units and divide them into this amount. But in this case, you don't have to waste time calculating the information that is already given to you. Because that is a mistake we normally do in exams. We calculate what is given to us, and there is a waste of our time. And then our fixed costs also, we're going to use it for this calculation of our break-even point. And you will see that this is the combination of numbers that we took to get our fixed cost. That is your factory overheads as well as your administration costs. So those will give you the factory overheads. So it's very important to know exactly what is it that is grouped as your fixed cost as well as your variable cost, because some of the examiners may decide not to write anything here to guide you to say these are the variable costs. They will assume that at this level, you know exactly what are the variables as well as the fixed costs. So when you add these two amounts together, they are going to give you 118,860. All right. And also, it's very important to check. I think I have to go back to. Let me go back to the previous slide. Okay. It's also very important as you do your calculation to also to look at the selling price of the goods. But you will check that from this slide, we are not given the selling price of the goods. So you need to look down further so that you can locate where the selling price of your goods is. Okay, when you check from the slide, this is where the selling price of our goods is located. You are not going to look at 2017. You need to look at the current year. This is the selling price of your goods. Now we have the selling price, we have the fixed cost, as well as the variable cost per unit. So what we are going to do now, we are going to determine our contribution per unit. Before we do that, I want us to look at the formula for calculating our break-even point. Our formula is going to be fixed cost divided by the contribution, or your selling price minus your variable cost. So it's either you use the contribution or SP minus variable cost. And you will see that already we have done our calculations in the previous slide, and which is this one. For our fixed cost, we have 118,860, and that's going to be your numerator. And then there's your 910. That represents your sales. And the 577 represents your VC. The difference between these two will be 333, which is called also your contribution per unit. So it is up to you, but it's always safer, to write both amounts so that now, if you get your contribution per unit incorrect, you are safer. You have already displayed your calculations. Therefore, it's safe to show your workings. Okay, we are still continuing with our break-even point. Remember that when we divide these amounts, they are going to give you 357 units. When you say your fixed cost divided by your contribution per unit, you will get 357 units. I want us to look now at the information that is provided to us and see where are we breaking, or where do you break even? If you look in the previous year, their break even was 435, meaning that this year it is 357. Our break even point for this year, it's 357, and it looks better, meaning that from this point, we are able to make profit as a business comparing to the previous year. In the previous year, we had to produce more units in order for us to, before we could get any profit. So it looks much better. There is an improvement in the business. I want us to also compare the units that were produced last year. Or if you look at the units, yeah, it doesn't really look good because of the number of units. It cannot look good. It can be. I want us to look at the units that were produced last year. It was 540 units, and then this year it is less units. Therefore, we're not looking good as a business. We need to analyze this information. If you check, it was 450 units last year, and then they've declined to 420 units. So we're not doing well as a business at all. And this is a very important question that you need to respond to in an examination. You will be expected to analyze the break-even point, also the production of the goods. So these are our production levels. They have declined from 540 to 520, or they have declined by a difference. And if you check the difference here, will be 120, if I'm not wrong. It's 540 units minus 420. That gives us a difference of 120 units. Okay, we have already covered, this section where they say comment on the break-even point. We have already started to do that. Okay, let's further look at the exercise. You will see again that the break-even point, as we have indicated, reduced from 435 to 347. You can also say that it reduced by a difference of 78 units. It reduced by a difference of 78 units. The business produced less units this year compared to the previous year. We've alluded to that already. And it's very important that you compare. If you want to earn more marks in an exam, it's very important that you compare your break-even and your production level. You will earn more marks by comparing the production, and the break-even point earns you more marks. You will earn minimum marks when you compare the production level to production level. If you compare this to that, it earns you lesser. But if you compare these two, you will earn more marks. Remember, when you are comparing the production level to the break-even point, you are able to determine the profit, and that gives you full marks. Like your last bullet, the business made a profit of only 63 units. Remember, we said 420 units that we produced and 357 of our break-even point. Therefore, we only managed to make 63 units. So if you calculate the difference between your break-even and your production, that will give you the profit that has been made by the business, and that will collect full marks for you in an examination. I hope that is very clear. I want us to look now at the increase in the direct material cost. Increase in the direct material cost. Let us inspect the information that is given to us. There you are given your direct materials. If you check your direct material, in 2017, it amounted to 148. And then in 2018, it increased to 180 per unit. So we're only paying 148 in 2017. Now we're paying 180. So there is an increase. And we need to know, how does this affect the business? How does it really affect the business? And also the reason for the increase. We have already mentioned. You can even say it has increased by 32 rands. You will still be correct if you give that as a comment. Let's look at the reasons for the increase in our direct material. They might have increased due inflation, transport costs. Remember, we added the transport cost to our trading stock or even the goods that we buy. Maybe again, the material is very scarce. So there's an issue of supply and demand in this case. Wastage due to poor workmanship. If you have also, the employees who are wasting the material due to poor training. Therefore, they need to be taught how to handle the material correctly to avoid wastage. And then the theft of the material also due to poor internal controls. If your assets are not properly controlled or are poorly controlled, definitely there's going to be a shrinkage. There's going to be a reduction in your material. Let's look at the solutions. We've already given some of the solutions already. You need to look for cheaper suppliers without compromising quality. Remember, we spoke about the inflation, meaning that now we need to look for other cheaper suppliers, but we shouldn't also compromise the quality of goods, because we're going to produce inferior goods and customers will be scared away. We also need to negotiate for transport and delivery discounts. In an event where the supplier of goods is the same supplier or is the same person who is transporting the goods, in that case, you will have to negotiate for delivery discounts. Remember, it's not always the case where you will buy the goods from the supplier who is also going to provide transport services. It's rare to actually find that combination. As a business, we need to also take advantage of bulk discounts. There is an advantage that we need to take. We need to train and supervise workers to minimize wastage. So they need to be educated on how to measure what is the correct quantity to be used in order to produce, specific goods. So they need to be given the guide, the specifications. That these are the number of items that you need to use when you want to produce. So trading is very important. We need to control also the stock regularly to identify the shortages. So if the stock is controlled, we'll be able to place our orders on time so that we don't find ourselves, at the very last moment, buying from other suppliers who are very expensive. We are going to take now another question from the 2020 NSC examination paper. We are supposed to prepare the production cost statement, but we are not going to prepare the production cost statement because already we have covered. All that I wanted to do was to bring your attention to the errors that are supposed to be corrected when you do your manufacturing accounts, because those are the common questions that you will find these days in the exam papers where you have to correct errors. I am going to give you this question to do for 5 minutes, and then we'll come back after 5 minutes. I want you to look at this question. The bookkeeper, this is just an extract. We're not going to cover the whole question. The bookkeeper calculated the cost below. Some errors were made. Number C, errors and omissions that are there. It's payment to quick deliveries for 75,000 for carriage on raw material. It was incorrectly allocated to selling and distribution. The payment to quick deliveries for 75,000 for carriage on raw material was incorrectly allocated to selling and distribution. I will take you to another question so that when we come back, we are able to engage. Okay, we're going to take a break for 5 minutes, and then we'll do this together as we come back. Welcome back, grade 12 learners. Let's get back to business. Remember, we said we're going to look at the errors that we find when we do our manufacturing or even cost accounting. Remember, we said the bookkeeper calculated the cost below and there were errors, right? The error that we have picked up is that there was a payment to Quick Deliveries of 75,000 for carriage on raw material, and that was incorrectly allocated to selling and distribution. It was incorrectly placed. You will see that with our direct material, remember that now, your transportation cost will be added to the direct material cost. They form part of your cost of the goods that are bought. If you check, the information that was given to us was 1,575,000 for direct material cost. And it's very important that we add transportation, we add carriage. And that carriage is a 75. Remember, they are telling us that if you are to prepare a note, this is a note. If you are to prepare a note, you will definitely write it under this note as a 75,000. And then this will give you a total that will go to your production cost statement. Meaning that now when you go to your abridged income statement, if there was any figure of this nature of 75,000 that was added, it will be deducted from your abridged income statement. We are going to deduct this because it has been wrongly placed under the selling and distribution cost. I hope I'm understood. I want us to look now, we are going to calculate now the direct labor cost. And for us to calculate the direct labor cost, if you go back to your answer book, I need you to go back after this exercise to your answer book. You will see that the prime cost was an amount that was given to us. We were given the prime cost. So for us to get the direct labor cost, it's very easy. We work backwards because already we have determined our direct material cost. So we're going to move backwards and say 2,550,000 minus 1,650,000, and then that is going to give you a direct labor cost. And then your amount should be 900,000. I hope you have tested the calculation. You have verified it. Here's another problem that needs to be solved. Our factory overhead cost, we are told that it amounts to 518,800. Okay. If you look at information C, it says the entire insurance amount of 25,200 rands was transferred to the administration cost account. This is the amount that was transferred to the administration cost account. 2/3 of this expense should be allocated to the factory. Therefore, the factory must get 2/3. And if you check from the question, the whole 100% was transferred to the admin. And remember that the admin will affect your abridged income statement. It's only 1/3 that is supposed to be recorded in the admin cost in your abridged income statement. And we need to take our 2/3 and place it right under our factory overheads. Okay, let us see our calculations for the factory. For the factory, we're going to take the same amount and multiply it it by 2 and divide by 3. Remember, there was nothing that was given to the factory overheads. There was just nothing. So we're going to take the entire figure of 25,002. We will multiply it by the ratio that is given to us, which is the ratio 2/3. And then if you do your calculations, that is going to give you 16,800 rands. This is the amount that will go to your production cost statement under your factory overheads. And then when you go to your admin now, you will say 25,200, as we have already explained, times 1 divided by 3. And that is going to give us 8,004. This will go to your abridged income statement. So these are the types of errors that you will need to actually, correct in an exam. So let us be prepared to find this type of errors. You will see my production cost statement. It looks, somehow now. But you will see 16,800 rands. It has been recorded. We are going to add that figure to 518,800. Okay, we are now going to go to another section, which is very important. We are done for now with our manufacturing accounts. I want us to look at the inventory valuation, because this is one of the most important sections for any exam again. The inventory valuation methods, remember that we have 3 of them. It is your FIFO, it is your weighted average, your specific identification also. Those are the 3 methods that we have. And you will remember that in your grade 10 and also in your grade 11, you did inventory systems. And those were speaking to periodic inventory system as well as perpetual inventory system. And you will notice that in most of the activities that you are given in grade 12, you'll find that the examiner does not specify if the business, in some of the activities actually, he will not specify if the business is using the periodic inventory system. If that is not mentioned and you are expected to calculate the value of stock, please use the periodic inventory system, because there you are not provided with the cost of sales. You need to work out the figure. So for your inventory, it is unlikely for any examiner to tell you to use the perpetual inventory system. It cannot be. It should be periodic. And the exam calculations that you normally find in this section are, you will definitely in any exam have to calculate your value of the closing stock. And that is also expected for paper 1. The number of items that are on hand might be expected from you to calculate. The examiner can decide to say calculate the number of items that are on hand. You may be expected to calculate the missing units. This is a very easy one. The missing units. Easy. And then you'll be expected again to calculate your costs, your gross profit. This one, the cost of sales, the gross profit. When you open up other papers or past papers, you will see those calculations there. And remember also there are indicators to this paper, paper 2. But remember, you do also have your formula sheet that is normally attached, to your question paper, and you need to know where to locate, the relevant indicators, because our indicators do not have the subject of the formula. You don't get the name of the indicator. You just see the formula, the formula, the denominator and the numerator, but you are not given the name of the financial indicator. So it's very important that you know that. The problem-solving questions, you will also find them in your inventories. And I want you to go back to your SIP material. The 2021 SIP material, it covers all this information. And that is session number 12 up to 15. Session number 12 to 15 it covers this information. There are worked out figures for you, to actually follow the calculations. And you will see also as you go to your SIP material, session 30 to 33, there's also revision. And you are also given the worked out examples so that you can be able to follow when you are working on your own. Okay, I want us to look briefly at the FIFO method because time is against us. We know that the stock that was bought first should be sold first. And the stock on hand will definitely be the stock that you have recently bought as a business. And this method is preferred when you're selling the goods that have got a limited shelf life. Like your milk, it has a limited shelf life. I want us to look quickly at the activity. This is extracted from your 2018 NSC November, and that's question number 5. Parker's Suitcase Shop, name of the business. Charles Parker sells travel suitcases. The year end is 30 June 2018. You are required here to calculate the value of the closing stock on 30 June 2018 using the first in, first out method. And Charles is suspecting that suitcases have been stolen. You need to provide a calculation to confirm his concern. The information is given to us. Let's read the information. You will see from the first diagram or even the first table, we are given the opening stock, the closing stock, but our interest is right here. We want to calculate the value of the closing stock. You will see we are not given the value of the closing stock. This one is given. The opening stock, the value of opening stock is given to us. Okay, let us look at more information that relates to purchases. Purchases, returns, and carriage. And you will see in this activity the transportation or even the carriage is already built into this, because with some of the activities you'll find that the price of the items are appearing separately, and also the transportation costs are also appearing separately, but in this activity they are combined. So you need to be on the lookout for such presentation. Let us look. This is what we have as a business. Our purchases, and you will see there are returns. These are the units that have been purchased. This is the total units that were purchased. And this is a breakdown. And this is very important. This information is very important. We need to know when did we buy certain goods so that now if there are any returns, we know exactly where to place or to deduct the goods that are returned. All right, so we have 25 units that were returned, and then you will see as you go down, there are sales. But at this stage, we are not interested in sales. We just want to calculate the value of our closing stock. This is going to be our point of departure. We're going to take this 496. This is our closing stock. And then we need, it's always better when you're working with your FIFO method that you work backwards. It's much easier. You can never go wrong because already the definition has told you that we start selling the goods that we received first, and then the goods that we have received last as a business will be sold later, which really that does, define, your FIFO. And it justifies why do we have to start from the bottom. All right, we start with the latest goods that we have in the business. All right, so we have 450 here, but we are told here there are returns from June purchases, and these are June purchases. This is where the June purchases are located. They are 450 units. Right. So meaning that now for June, we are going to say 450 minus 25 units. That's going to leave us with 425 units for June. We'll have 425 units for June. All right. But remember that our stock on hand is 496 units. We'll therefore say 496 minus that, it is going to give us a difference. Please use your calculators. 496 minus 425. That will give us a 71. I am getting 71. I don't know if you're getting the same figure as myself. 71 units. And if you can check from the table, there's nothing like that looks like 71 units. But we know that the units are here. Those units are here. They were bought for 2,930 each unit. And these ones for June, they were bought for 3,040 rands per unit. So these are the calculations that we are going to use to calculate our closing stock. We're only taking 71 units from our March. Let's see our calculations now. Okay, there's 40. Unfortunately, my slide doesn't look very good, but we have the 71 units that we've just calculated. Okay, let us check now. We're going to take our first set, 425 times 3,040, and that is going to give us that figure, 1,292,000. All right. The goods that are on hand that were bought in June, they are at the value of 1,292,000. And then the goods that were bought in March at this value. Now we're going to combine these two figures. We are going to combine them so that we get our closing stock. When you combine this, your A and your B, it will give you your 1,500,030 rands. So that is the value of the closing stock. Let us calculate now the stolen units. We are going to calculate the stolen units, and we are going to need this. This is the information that we are going to need, to calculate our units. Remember, we are not going to attach any values here. It's only the number of units that we are going to look at. But normally when you calculate your units, you will say your opening stock plus purchases, and then you take out the returns, you take out your closing stock. Let's see. What do we have? Yes, our 420 there is our opening stock. We took that. We purchased 3,155 units. This is what we bought. Remember, the examiner has already added for you this. He has already given you a total. You don't have to waste time adding again. Okay. And then our returns, it's 25. They will be in brackets because they are going to reduce whatever that has been purchased by us. We have returned this back to the suppliers. And then our closing stock, you will see it's 496 items. And these are the goods that could have been available for sale. These ones. Your 3,054 rands. 3,054 units. You will pardon me. I'm only thinking of rands all the time. Okay, let us look at the number of units that were sold. Look at the bottom. 3,050 travel suitcases were sold at 4,002. So we're only interested in 3,050. So this is what has gone out. And we are missing 4 units. These are the units that are missing. See, this is a very easy calculation that you need to really know if you enter any exam room. Your free marks are here. You can also use your TIA account if you want to determine this. It's very easy when you use your TIA account. All your stock, the opening purchases, and then less the units sold, the closing stock, then that gives you your stolen items. So the examiner is not going to penalize you if you decide to show that calculation, because it's a calculation through the use of TIA account. We are now going to calculate the cost of sales. It's another very important calculation. For your cost of sales, you have your opening stock. This is how you calculate it. It's opening stock plus net purchases. And remember your purchases, net purchases, it's purchases less, returns. And then I'm going to take out your closing stock for you to determine your cost of sales. Okay, you will see that in the previous slide, we have already made some of the calculations. We did the calculations. Remember, you are given your opening stock here. That's where we're going to record it. This is where we're going to record your opening stock. The calculation that we have already made is our closing stock. The closing value. It is the closing value of 1,530,000. This calculation, I want you to go back here. Come and check here from the information that is provided to you. You will see that we have a total of 8,460,850. And we need to take out this. So this is our total purchases. And then this is our returns. If you say this figure minus returns, that is going to give you a net purchase. That gives you the net. So it will be opening stock plus net purchases minus your closing stock, and that will give you the cost of sales figure, which is 7,798,320. First part is done. Let's look now at the gross profit. Remember, we said the cost of sales is that figure. Your gross profit, the formula to calculate your gross profit, it will always be your sales minus the cost of sales. Okay? This one has been calculated. Whether you get it wrong in an exam, you need to take it down to your calculations, because you will be given a mark, because that will indicate that you understand the principle. Okay, let us check our sales. Remember that we have 3,050 units at 4,200 rands each. That is going to give you a figure that I need you to calculate now. Please calculate that figure. Okay, when you calculate that figure and then subtracting your 7,798,320, you will get your gross profit. You will get the gross profit of this amount. And it's very important to take your figure down there. It can be how wrong, just take it down so that you get a full mark for that. And you will stand to get another mark here also, a method mark, by simply, getting a difference between these two, even if this one can be wrong. So please learn to work, apply the correct principles. Even if you doubt your figures, just go with your calculations to the next level that will assist you. We cannot penalize you twice. Okay, let us look now at the stock holding period. The question here is, the owner is concerned about the volume of stock that is on hand. We need to calculate for how long his closing stock is expected to last. This is the formula that you will use to calculate that. Your average inventory divided by cost of sales multiplied by 365 days. So because you want to know how long is the stock available going to last the business, it's very important to actually calculate that. You will remember that from our previous information, we had the closing inventory. Unfortunately, in this activity, an instruction was that use the closing stock. An examiner will always tell you what to use, even though the formula says average inventory, but they will always guide you to say, use your closing stock to calculate. But if the question is very silent, therefore you will know that you need to take your average inventory. So that has been calculated. Even if your closing inventory was wrong, work with it. Take it to this calculation. And then also your cost of sales, it could have been wrong. You will still earn marks for just bringing down, the answers that you came there with them from another calculation. And then we'll have your 70.2 days. And I want you to go back to your SIP material. And it's also again session 12 to 15. You will see from that material, there is a formula sheet for inventory. That formula sheet is actually giving you a breakdown of every question that is assessed in the inventory. So it gives you the whole collection. Just go to your SIP material, you'll find that. And you will master this section. This is a section that you really need to master. We are still on the volume of stock on hand. Remember that if you keep stock, there will be also problems that are associated with the keeping of stock. Whether you're keeping more stock or you're keeping less of stock, but there will be problems that are associated. I want us to look firstly at too much stock that is kept by a business. If they are keeping a lot of stock, definitely the stock will be obsolete, it will be outdated, and it will be useless to customers, meaning that the owner of the business will even have to sell the stock at a reduced price. The staff might notice that the stock in the premises, and they will decide to steal. They'll definitely take a chance and steal that stock. Let's look at the problems associated with few stock items. Definitely you lose customers if you don't have enough stock. You will lose your customers because you won't be able to supply them with the goods they need. And they will definitely go to other retailers who are always prepared to provide a service or even the goods. We are now going to look at the weighted average and the specification. Remember, an examiner is going to test you on two of the stock methods. If you inspect all the past papers, two stock methods are tested. Remember, we have three. Out of these three, he will test you on two. So you can never know the combination, which one is the combination, but it is always better, to go through all the three methods in preparation for exam. Your weighted average method is one of the methods that is used, and this is for stock that is normally bought in small quantities. All right. And, it has to be weighted for you to be able to calculate the closing value of that stock. It must be weighted because it's many small items that need weighting. And then the specific identification, this one is for large commodities like your cars, you can see, your furniture, laptops, or whatever appliances that are big. So it's very easy, for these items to be recorded independently from other items. Definitely will know the value of the price tag of the cars that are in the business. It's very easy to determine that because items normally are fewer when you're dealing with, the specific identification, unlike here in a grocery shop. It's very difficult here to determine the value of these items. That's why you need to weight them so that you can determine the value of the closing stock. I'm just going to give you a summary of how do you approach these three methods. Already we have done the calculations on the FIFO, but remember we said that it's always nicer to start right down at the bottom. You start at the bottom and then you go up. I hope you still remember the steps that we took. Let's look at the weighted average. This is the formula for you to calculate the stock when you're using the weighted average. If you go back again to that session that I've referred you to, that formula sheet of your session number 12 to 15 of SIP material, you will find this also. The formula is there because you need to look at your opening stock, your purchases, your returns must be deducted. You add carriage, you add custom duty if it's there. And then at the bottom, your opening units plus the purchases minus returns. If you can just capture, this formula, you can never go wrong with the calculation of your closing stock using the weighted average. Other calculations that we have already done, that will still apply here. Your cost price, your gross profit, those will still apply in this method. The only difference with this method is how the value of closing stock is calculated. But the rest of the calculations are the same. And then when you go to your specific identification, you will say also your opening stock plus purchases, less returns, and then less sales. And then that gives you the closing stock. And then I'm going to multiply by the cost per unit. So that's just a summary of the three methods. Budgeting is our next section. And I'm afraid we are running out of time, but I'm just going to summarize this and say, this is a very important section for your exams, and this is a section that you normally don't respond to. It carries a lot of marks. It's very important for you to know how to prepare the debtors collection schedule. That is a very important calculation. And also, if you are given a percentage of discount, you need to know how to take that percentage out. You need to know how to deduct it so that you can earn yourselves marks. So your debtors collection schedule is there in any examination. If it is not there, you will definitely be tested on the creditor's payment schedule. Unfortunately, we can't do it now. It's always very important because you know what, the principles are nearly the same for these two calculations. Therefore, that is why an examiner will not ask you to prepare both of these. you will always prepare one of the two. And it's also very important to note that when you are expected to prepare your cash budget, you need to know how to calculate the percentage increase. That's very important. You may be given expenses and you may be expected to calculate the percentage increase. You may be also be expected to calculate, to indicate in your cash budget how a certain value has increased. The examiner can say the expenses will be increased by 10% from this period, or reduced by 10% from this period. Sometimes they will give you a calculation after the increase has been calculated. So you need to work backward. Always when you are working backward, you will always go to your 100%. If they say to you the rent expense is expected to increase by 10% in May, and then you must know that in May you are going to pay 100% plus 10%. But if you have to calculate the rent expense for April, it means now you'll have to go back to 100. You must go back. And remember all the time when you are going back, you will always use your 100 when you go back. The original value was at 100. Therefore, you go back to 100. And always use your UK method. That will always guide you. You will know that now because I'm going back, I'm going to take 100 and divide by what is given to me, which is 110. And the other calculation also that is very common with your budgets will be the calculation of the interest or the calculation of the loan. And you'll be given an interest where you're expected to calculate your loan figure. And it's very easy. Use your standard calculation for interest. Your standard calculation for interest will always be your capital amount, which might have not been given at that stage. It will always be your capital or your loan multiplied by the rate, the percentage, multiplied by a month, maybe over 12. That gives you your interest. Always use, this is your starting point. This must be your point of departure. And then if you are given an interest, remember that now you will have to work from here. Right? It is going to be your interest. All right. And then all the other figures that are here, all right, their denominators will be numerators, and the numerators will be denominators. I want you to go to the second chance study guides. There are 5 of them. There's a second chance study guide on balance sheet. When you page through, I can't really remember the page number, but there is an example that is given to you where a calculation for a fixed deposit has to be completed. That calculation indicates to you, it unpacks how do you really go back. Because in that case, you are given the interest on a fixed deposit, but you have to work out the fixed deposit amount. And it is the same concept that we are talking about here. So I need you to please go to that second chance study guide. It explains to you very well. My dear grade 12 learners, unfortunately, we are running out of time now. We're going to end our lesson for today at this stage. Unfortunately, we couldn't unpack more content, and yeah, we are limited. But thank you so much for attending this session. And I wish you all the best for your examinations, including your final examinations. And thank you so much for watching this lesson. We'll see you next time when we do our revision lessons for final. All the best to you. Thank you.